Successful traders always follow the line of least resistance. Follow the trend. The trend is your friend. Jesse Livermore. If you don't know who Jesse Livermore is, you need to read about him. At least go check him out on Wikipedia. A great trader many years, about 100 years ago. So check him out. Now let's talk about what's going on these charts. We see the S&P down for the day, the NASDAQ up a little bit. Bonds down, gold down, Bitcoin up. Now, let's see where we are on this practice trade that we have going. It started, of course, yesterday. And when I say yesterday, that is the 13th. I'm recording this for you on the 14th. Had things swooping down in the morning and then recovering a little bit in the afternoon. Overall, S&P down 0.24%. Remember, we're at a negative 11 because our two-day chart still in the green. Now, you guys, y'all pay attention to what's on these charts. You've seen my little volatility, my little volume indicator here. Tom, what do you do with volume? You don't talk about that much. Well, volume is nice to use to confirm what you're seeing on the charts. When you start seeing trends develop, is the volume increasing? Is it varying? And then when things start to roll over or start to top out, and you see sort of a red volume there, you see a spinning top, and then you see a hammer up here, and then all of a sudden things start going down and the volume's accelerating a little bit. Then you see things sort of break here where you have these spinning tops, almost dojis that are forming. And again, I pay attention to a lot of things when I look at the charts, and volume can be helpful. When you set volume here, and it's just your standard volume setting, a couple of things that you can do. I sort of go back and forth with whether I want the color based on the previous close or not. If you don't check that, then a red candle's always red volume, green candle's always green volume. If you do check that, what ends up happening is you will actually, it'll base the color on the previous close. So you can do it either way. Experiment around with that. Not going to do a class on volume, but I will tell you that it is helpful to look at, because when you see volume really spike up here after things are going down, it can tell you people are loading up for a big up move, or when it moves down, what you see happening is, they're maybe screwing around with some levels of support or resistance and selling off things. There's all sorts of stuff the market makers can do to you. And a lot of times, one of the best ways to look at volume is many times not on this half-day chart, but actually on the daily chart. Now, again, it's just going to show you what is happening overall with volume levels. Are they increasing? Does that mean that things are going to continue moving in the same direction? How are they changing up and why? And then where do things go after that? And then as you notice, when things start to build, but then the volume really is not spiking, does it mean things are getting ready to turn over? Now, again, all this can add too much complication. So that's one reason I don't let myself get overwhelmed with too much information. That's why we always look at Occam's razor. Occam's razor is so important. It's the principle that says the simplest way is the best way. Less things to break. So don't overcomplicate your world. This STC rotating over for us, giving us jumping in points is so beautiful because, again, it works time and time again, not all the time, but with that 2-to-1 risk to reward ratio where you set it based on average true range. That average true range is important because what does it show us? It's based on the prior 14 periods. So it's helping us deal with the volatility there so that when we do have a trigger take place with the STC rotating either down or up, we're using where we are on the 200 EMA to help us be in the right direction. If we're below it, it means that, of course, the trend is down. If we're above it, it means the trend is up. So we're going in the same direction as the trend. That means we're using all these things to our advantage, and it makes it more likely that what we're doing will work. And of course, if you have a 2-to-1 risk to reward ratio and your balance volatility, based upon position size, you only have to win 4 out of 10 times and you're moving in the right direction. So I would just encourage you, follow with us every day, share this with your friends, and 10 to 15 minutes, that's all we ask, my friends. You can figure this out. It's not rocket science, it's charting art. So we're still in the green on this trade we initiated on, let's see, that was Wednesday. And now moving in the right direction on Thursday, hoping it'll continue to move in the right direction on Friday. If not, we'll pull it and we will wait for the next opportunity. You don't have to be greedy, and you damn sure don't have to be stupid. And let me tell you what dumb is. Dumb is staying in when you violate your risk area, what we call your loss band. So where are we on the NASDAQ 100? Up a little bit for the day. Really, pushing down strong in the morning and then pulling back a little up in the afternoon. That's okay. We'll keep our eye on things, see how they go. Of course, if we look at volume, you can see where the volume was down in the afternoon. Volume's been up with those down pushes and then has slowed down with those up pushes. So that tells us something else too, doesn't it? That there's not a lot of force behind these bump ups. So we'll see how things continue to go. It just makes us feel a little better. Again, we're still in. We're just monitoring. Now, let's move on from the S&P and the NASDAQ 100. Again, both of those at 11 on the success multiplier formula. Going to 20-year bonds. Now, we're 20-year bonds when it comes to the 200 EMA. Well below that. STC is green and moving up, but we're not in an up move. Why? Because we're below the 200 EMA. We have a green STC on the half day. We have a green STC on the 2-day. And we have a red STC, although 3 weeks of trying to move up on the weekly chart. So we're still waiting to see if things are going to break over and head down. If they do, then of course we'll be there ready to short. Our last short did not work for us. The time before didn't work great. I think we made a little percentage, like 0.5% or so, because once it went green on us, we pulled that. And I'm trying to see if, yeah, 0.43%. So again, not what we were looking for, but didn't lose anything. But overall, bonds have been quite good to us. We have some decently successful trades as we go back in time since the beginning of the year. Little trick here, this just scrolls to the most recent bar down there at the bottom right. Takes you back. So where we are for the day, down 0.82% on the half-day chart. Again, nothing yet, waiting for the STC to roll over, heading down for us. But that is where we are. Let's move on from bonds, go to gold. Gold cranking down for the day, our biggest downer, 1.40%. Gold had, sort of for a couple of days, it sort of slowed down, then rocked down for 2 days, slid sideways for a day, and then rocked down again strong, recovering a little bit in the afternoon. Red on the STC, we jumped in, took our profits there with a 1.72%, which is double the ATR. Then, of course, things heated up quite a bit. We'll see how low gold goes, but that is where it is right now, down on the STC on the half day, of course down on the 2-day, pushed through that 200 EMA a while back, and touching the 200 EMA on the weekly and down going into the 5th week on gold. So that precious metal not doing so hot right now. Some point it'll recover, just like the next Bitcoin will, up for the day 4.92%. A long way to go before we cross that 200 EMA. And again, Bitcoin sort of languishing down here on our chart. We, of course, track the ETF, the VanEck. There are 3 Bitcoin future ETFs. The reason we track the VanEck is because it's the one I've actually traded in the past when there was an opportunity to go long, which there is not now. But It also has the lowest fees. That's the reason I've used it. And it's quite liquid. And again, that's why I follow it. But there's nothing to do on Bitcoin now except wait to see when it recovers. I'm not going to say if. I think it will eventually recover. And of course, we will be ready for that recovery when it occurs. Today, maybe we're getting a bottom here. I'm not willing to bet on that. But again, we can see where things have been sort of holding, and hopefully things will get moving. When they do, we'll be here. We'll be ready. We'll be the first who are ready when we start seeing indicator verified support and things moving in the right direction. Patreon members, of course, we sent to you yesterday the Charting Crypto training. We sent to you the live Q&A that we did on Wednesday. That's the monthly Q&A. We also sent to you a few minutes ago the weekly vertical crossovers up and down. I think there's 16, 10 up, 6 down. We try to find 20. There weren't 20 to find. That's where we are, folks, as we end the day on Thursday, move into Friday. And of course, at the end of the markets on Friday, the weekly review and forecast. If you're not a subscriber at chartingwealth.com, go there, sign up. We have great trainings for you each and every day, along with all the other great stuff we do. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.